Good morning, everybody. This is Tyler and welcome to Apex Trader. This video today, I'm going to be going over exactly how you are going to set up your charts so you know exactly what it is that you're looking at. With that being said, let's jump right on into it. Go to your Webull platform, and right now we are on the markets page. But what we are going to do is go over to watch lists. I know I have my screen turned sideways right now, but we are about to fix that. Go up to a search, and I want everybody to just type in DJI. It is the Dow Jones. We're just going to go nice and simple. We're not going to go with any fancy name stocks. We're just going to do this example of setting up your charts on the Dow Jones Industrial Average. Now, when you click on the Dow Jones Industrial Average, it's going to take you right to this page. And if you have not set up your charts or anything along the lines of that, this is most likely what it's going to look like. You are going to have a line, and in this case it's points, but on a stock it would be the price. We want to fix this so you know what it is that you are actually looking at. You want to know price movement, you want to know indicators, you want to know where the stock is trading at in the overall market trend. So let's go ahead and get started. Go ahead and double tap the middle of the screen. Once you double tap it, it's going to kind of open it up, and go ahead and go right up to this little icon where it will actually turn your screen sideways. And now that probably looks a whole lot better. You can now see exactly what I'm doing. What we are going to do is the very first thing is look right down here at this squiggly line. This squiggly line is what's representing this. We want to change that to candlesticks. So go ahead and tap it, and it's going to pull up a whole bunch of different options. We're going to go with this one right here, the one that says candle. Not hollow candle, you can if you want to, but it's just easier for a candle. So once you click candle, it's going to do a little bit of loading, and then voila, you have the candlesticks. If you're not familiar with candlesticks, I'm going to do a quick explanation of what they are. But first, let's go to the time interval. As you may see, you have a 1 day, a 5 day, a 1 month, 3 months, and so on. Year to date, 1 year. That displays the time period up here on these stocks. But with the candlesticks, we are going to use this right here. As you can see, it says 1 minute. We want this to be on 1 day so we can get an overall view of the overall market and everything. So go ahead and tap that. It's going to pull up this long list of all of these different minutes of intervals, which I'll talk about here, what different time frames are best for what style of trading. But if you scroll down, you will hit 1 day. Go ahead and tap that 1 day for me, and it is going to bring up the Dow Jones Industrial Average day by day, what the market has been doing. So if we scroll in, for example, the candlesticks, on a regular stock, this would be presented as a candlestick, and if we really zoom in right here, we're going to really be able to see how they work. So for example, this is called the real body, and this right up here on the top is called the upper wick, and right down here it has a very small one, but it's called a lower wick. Now at 9:30 in the morning, when the market opens, that is where it starts, right here. Not the bottom of the wick, but right here. And at 4 in the afternoon, when the market closes, over here on the East Coast, This is where it closed. But the overall day, it traveled all the way up to the top, and it also traveled all the way down to the bottom, as in price movement. So it opened here, traveled all the way up, maybe it even started off and traveled down and then all the way up, and then came back down and ended right here. Now you can see, since it ended higher than it opened, the very next day it opened just a little bit higher. That depends on the futures and everything. And with that being said, it opened and had a very nice green day, went all the way up to a high, came back down and closed right here for the end of the day. That is how you look at candlesticks. And on a chart, that would be direct price movement, which is extremely important because each and every single one of these tell a story in a way. Now if we go ahead and zoom out, you can see that there are a whole bunch of candlesticks. We have green candlesticks, and in my instance, we have yellow candlesticks, but yours are most likely going to be red. In the video I posted earlier, I did explain how to change those, so if you have not gone through that part yet and want to have yours yellow as well, I just have mine yellow because red is a very scary color in the market, so I like to kind of brighten it up a little bit with yellow candlesticks. But all these candlesticks tell a very nice story on what the day does. For example, the green candlesticks represent positive days, and the yellow candlesticks represent bad days. And you can tell once the yellow candlestick started to appear, so did the drop of the stock market, and once it started to reappear, you have now are looking at a nice uptrend, bullish, and it goes up until right here, right now. What we're going to do next and talk about is how to set up indicators. Right up here, right next to the little button that you click to turn the screen sideways, we have utensils that you can use to draw. You can use these and actually draw on the chart, all of these, and you can actually scroll down. All of these are very, very unique. I'll get into these here real quick, but we're first going to set up our indicators. So we are going to want to go with this one right here. Once you click, you're going to have a whole lot of indicators right here, but I'm going to tell you the ones that you really need. So right down here on the bottom where it says plus, add, and then 50 indicators, go ahead and hit that plus sign for me, and it will bring you to the indicators page. As you can see, it says selected indicators, and if you scroll down just a little bit, it says the sub chart. These are all of the indicators that we're just showing right here. So that's what that means. So you might have a whole bunch of random stuff that you do not need, so we are going to go through. I'm going to tell you exactly what you need. If you scroll down, we begin into the very first category of the moving averages. There's 3. If you go all the way over here to the drop down tab, you are going to want the EMA line, the exponential moving averages. I will talk about this one here very quickly in a moment, because we will also have to set up the days over which it is averaged by. But all you want to do for now is just star it. If you have these 2 starred, unstar them. Moving on down to the support and resistance indicators. Once again, hit the drop down tab, and you have 6. Go ahead and do the Bollinger Bands. Those are very useful. I'll show you how to use those I believe that is all that we have right there. Yep. So next, go down to the trend indicators. There's 14. So come right on over and click 14. Now let's scroll down through these and make sure if you have some that are marked, unmark them, just so we can simplify your chart. And here we go, we get the MACD or the MACD. It's the Moving Average Divergence Convergence Oscillator. Extremely powerful indicator, so star that. I'll show you exactly how to use that as well. And continue on down. If you have anything else starred, unstar them. We have the overbought and oversold indicators. These are extremely powerful as well. Hit that drop down tab and scroll down until you hit the RSI, the Relative Strength Index. You should have this on every single chart you set up. So star that. And if you have any other ones, go ahead and unstar them. And then the market strength indicators, I don't believe that there are any we need in there. I am sorry. You do. You need volume. Go ahead and star volume for me. And below there is this column that has 7 others, and you don't need it. So scroll all the way back up to the top to where you now have exactly what you need. You have the EMA and the boiler bands, and then under the subchart you have the volume, the MACD, and the RSI. As I mentioned earlier, we need to set up the EMA lines. So come right on over here to the stop sign looking thing and click it. It's going to take you to this page. It does not matter the order you put these in. All you need to know is you need to have a 9-day, a 20-day, and a 180-day or 200-day. It is your preference. You can do the 180 or 200. That is up to you. Me, I like the 180-day. I will explain what these do on the chart next. So once you get these to a 9, 20, and 180, you can also choose the color that you want them. So the EMA 9 is your 9-day, and these are the colors. I have them just because we're going to have a whole bunch of different colors of lines on the chart that are going along with the candlesticks. So you want to know exactly which is which, and you want them to all be a different color, because if they do get close together, you want to be able to recognize the difference between, let's say, your 9-day and your 20-day. So with that being said, once you set those up, you can go ahead and select back, and you will be right back out to the indicators page and select back one more time. Now we're going to finally add on the indicators we just chose onto our chart. So go right back up here, and as you may notice, they're all white, and we're going to want to include the EMA, the volume, the MACD, and the RSI. You want those to highlight blue. I will talk about the boiler bands here in a second, but for now, as you can see, the reason that these two were not a part of the subchart is because these are actually on the main chart, and the subchart are these down here. With that being said, you want the RSI to be up here above. So you can either tap anywhere along right here, and it will change through to the MACD. In this case, it does not show the RSI. No worries. Scroll down and tap the RSI right here. And when you tap that, it will give you the option to move up or move down. So we will go ahead and move it on up one more time to the top of the chart. And now I have volume up here, so I'm going to click the volume. I'm going to move it down, which is right there. I'll move it down. And you can adjust all of these indicators to your preference. This is how I like it because I like to have the relative strength index right up above the chart so I can have a very clear picture of it being either oversold or overbought. And what I like to have exactly below it is the MACD. So I'm going to go ahead and move the volume down to the very bottom below. The reason that I like to have the MACD exactly below the graph or the chart is so I can have a very clear representation of what is going on as well. Because you might have noticed all of these bars that are on the graph, this is also the volume. The reason that I add the volume indicator is because it shows a lot more detail of the volume that's going on. So that is why I include the volume. Now, as I was talking about earlier, let's talk about these three lines that we just added. So I'm going to zoom in here a little bit, and we will zoom in to right here. As you can tell, this red line is the 180-day line that we chose, and I have it red. Now you can see two different lines. Which one is the 9-day and which way is the 20-day? The 9-day is the one that is riding the candlesticks the closest, and even right up in here it's actually going right through them. The 20-day is a little bit farther off because remember, these are the days that it's averaged off of. So compared to price. So this line down here, you always want the trend to be your friend. And you may have heard this before, but this is exactly what it means. You want the candlesticks, the stock you are going to choose, to be above the 180-day EMA line. Therefore, it is in a bullish uptrend altogether. As you can see right here, when it broke below it, you can see exactly what happened. It was falling. And once it came back and recorrected, it continued with its bullish uptrend. Now if we get a little bit closer in, so we can really investigate the 9-day and the 20-day, this is how they look. The 9-day definitely is very close to the candlesticks, and the 20-day is a little bit farther off, but not too close behind. This is excellent for buy-in and exit out points. For example, a buy-in point could be when the candlesticks trade right above. And what I mean by that is the candlestick might come up like it did right here, and it touched it. But you would not buy right there because that is not confirmation. You need confirmation of the next day to make sure that it is going to continue up and above. Because let's say you don't know what this next day is going to be. Just as if we come all the way out over to here, we don't know what tomorrow is going to be. So it is very crucial for this instance that you wait until the next day to buy in so you know what exactly happens. Because if the next day opens, say you bought in right here because it touched the line, and the next day it opened and fell, you would be in a stuck position. And you definitely do not want that at all. You do not want to be in that type of position. So let's go ahead and talk about the different time intervals. So as you can see that this is the 1 day. Every single candlestick you see represents 1 day. So you can see right here, there's about 2 months worth of price movement. We are going to select this because every single different interval gives a different outcome of certain buy and sell points. For example, if we scroll down and go with the 4 hours, it's going to look a little more volatile. And what I mean by that is with the 1 day, it looks pretty flat up through here. With the 4 hours, you have a lot more volatility with the dips, and it's pretty much a closer time frame between what's really happening. So every single candlestick represents 4 hours. And this shows the pre-market and after hours as well. The 1 day interval does not. So remember that. And if we come back down, let's say we go to a 1 hour time interval. Let's let it load real quick. You can see a whole lot more volatility. You can see these drastic changes in price volume. So let's go ahead and let's go down to a 5 minute. A 5 minute, meaning every single candlestick represents 5 minutes. This is something you would use in day trading, meaning you are buying and selling a stock within the same day. These trades last anywhere from minutes long up until 30 minutes long or an hour. It all depends on what is going on. With that being said, if you were looking at the 1 day candlesticks, where every single day represents, or every single candlestick represents 1 day, and you were in a position, these positions would last, if you bought in here, these positions would last not just minutes or hours, but you're talking about weeks to 2 weeks, maybe even 3 weeks and longer, just depending on what it is doing overall. And with everything that you see, let's talk about drawing trend lines. So as you saw earlier, right up here, we have a trend line, horizontal line, that kind of stuff. So for a trend line, you will click trend line and you will input 2 points on the graph. So the very first point you're going to put at a low. So you click it and your one little dot. And the next point you're going to put over here at this low. So we're going to go ahead and click it. I'm going to put it just a little bit past it so I can change it around. But you tap it, you hold it, and you drag it. And you do the same with this side over here. You tap it, and then you drag it. I like to get the line to hit it, just like that. So this is how you draw a trend line. You go through the bottom of the lows. And this is also what we call support. Bounces off of support, and every time it hits support is a great buy point if and only if you have confirmation the next day that it is bouncing off and it does not fall through. In the instance, you buy and then you decide to maybe buy again because it's going to bounce off, and it were to have dropped below the support line, you would want to sell, because that is a very, very strong indicator of it now falling through support, and it's going to continue. So every time it bounces off support, it's extremely important to keep an eye on what exactly it is that it's going to do next, because it could be great buy points, or it could also be times that you want to exit. With that being said, you can click it, and it's got these little options right up here. You can, this one right here, you can change the color. So if you tap the color, all of these will pop up. I like to have mine yellow, but you can change it to whatever you want. And then right here, we got how you want the line to look. So if you click the line, it'll give you all of these different line styles. You can make the line extremely thick, all the way to extremely thin. You can also do dotted lines. You can have this cool line right here that has arrows to verify which way it's going. That kind of cool stuff. And then say if you just want to overall get rid of it, you just hit the little tiny trash can button and it disappears. And we can check out a whole bunch of different cool lines that you can draw. You can draw a horizontal line, which pretty much you just click the horizontal and it puts a very flat straight line up on here. And the way you use a horizontal line is you run it through the highs, because as you can see, this is actually very interesting that we have it here. As you can see, the stock came up and it did not it did not go through this right here, which this line would now be called resistance. And what happened after it bounced off resistance? Well, it came right back down to this point right here. And what's very unique about a resistance line is if it comes up and decides to test it again, it will either test it and fall back down, or in this case, it will break it. And this is a great example of it doing exactly that. You are here one day, and the very next morning it opens way above the resistance line because it broke it, which is very, very important, because you can also see that this resistance line is a very valuable line that not only tells you the previous lines that it bounces off of, but it can also tell you the future lines that it may also bounce off of. So in the instance the Dow Jones Industrial Average continues to fall, it could very much so fall all the way down to this line right here before it might bounce back up or go through. But we're talking about the Dow Jones Industrial Average. The chances of that happening at the moment aren't likely, but you never know with the stock market, so I can never guarantee you anything. Let's go ahead and delete the line. So I'm going to click it and just do the little trash can icon. And the very last button that we have to talk about is this one right here. If you click that, you can do some pretty cool stuff. If you do chart layers, you can type in a different chart, and you can have two charts, and pretty much you're going to have a second chart that is going to be on the same graph, the same chart. If you do versus, you are going to have a split screen with a chart and a stock on one side and a completely different chart and stock on the other side. Or you could have it the same with different time intervals, because as we talked about, the different time intervals are very crucial to what time period you are planning to trade in, if you're going to do a swing trade or a day trade. You can do dual charts, which is very similar to the versus and compare. And then you can screenshot, and then we have a settings. And at settings, you might need to go here first if you have a simplified chart. If you have a simplified chart, you're going to want to click it to advanced, so you are able to put all of those indicators and change the line to candlesticks and mess around with all of these cool features. So you want this to be on advanced chart and not simplified chart. And if we scroll down, we got the frequently used indicators. You got the subcharts and the indicators. You want to make sure those are on, because as you can tell, what we just went through, we did indeed use subcharts and we did use indicators on the main chart. We have the chart height, which is standard. We got the include extended hours, which yes, you do. You do want to include the extended hours trading sessions. They are going to appear blue instead of black for purposes. And you can go down through here, and like we picked, we went ahead and did the candle style, and this is pretty much just all of these settings that your chart is in. So if we go back, that is exactly what it looks like. With that being said, I thank you greatly for joining me with this video. Do not forget to come over and join me on Apex Trader Facebook group page, along with my YouTube channel. I do post a whole bunch of great stuff on there, so definitely come and check me out. That would be very much appreciated. It would be very awesome. But from here, If you have any questions or anything, drop them there in the Facebook. Thank you very much and have a great day.